Rest in peace, Tesla, 2020 to 2023. These are some of the things that you can find trending on Twitter recently, as Tesla's always been a very polarizing stock. A lot of people love it, a lot of people hate it. Unfortunately, they had some pretty lackluster earnings yesterday, which is why some members of the investing community are, turning to Twitter and expressing their discontent with it. So what's up, guys? Hope you guys are all right. My name's Will. I'm an ex-licensed stockbroker for 5 years, portfolio advisor as well. And now I fortunately get to travel the world and teach people about investing and how to better manage their finances. So today I wanted to bring you guys a video on my thoughts on Tesla and what I think is going to be, the potential for this company in the future. Is it going bankrupt? Is the stock going to zero? Or is this just normal price action and normal movement through a very rough economic year that we're about to go through? So let's get into it. So first, I wanted to kind of cover the charts here on the technical basis. So as you guys can see, right, we have been kind of in this equilibrium range here on the weekly time frame for the better part of the last 2 months, since pretty much February. And now, unfortunately, we did lose our daily and weekly support level. Our last level of support has now, unfortunately, been broken. And we are now going to look down to further price targets. Filling this gap is going to be an optimal location to expect. So this is between about 145 to 155 area on the stock. It's very, very unfortunate that we had the gap down open into further downside continuation today. I was hoping that we might be able to hold this 163, 164 level, but it just didn't play out that way, guys. So the next target will be down here. This green box represents my optimal location that I will be looking to purchase more long-term Tesla shares. We still have so much space on the monthly time frame before setting a new lower low, right? So we're still trying to reverse the monthly time frame, guys. And keep in mind, these monthly time frame reversals take so long to play out, right? But we still have a lot of space left to do it. Personally, I would be hard pressed to believe if we go for lower lows on Tesla. I mean, the earnings were kind of bad, but let's not forget they are growing revenue. We're going to get into that in a bit. They are growing revenue. The outlook is really good. They're taking over the competition. They're literally pricing out the competition through an aggressive pricing scheme. These are the unfortunate side effects of capitalism, right? Elon Musk is truly a shark. What he's doing right now, he is being a shark. And it's, you saw it in Ford and GM this morning. It's making waves in the investment industry about what he's doing and how he's trying to price out the competitors, knowing that all his competitors are negative on EV production in terms of net margins per vehicle sold. So he's looking to take advantage of that and kind of put their EV divisions out of business at the expense of his own enterprise, right? So very, very, very aggressive pricing tactic, something that you see, you've seen companies do these guys for the last 10, 20, 30, 40 years, right? Classic pricing mechanism. I mean, Walmart has been the most egregious example of this that I can think of in the past 20, 30 years. So keeping on with the charts here before we get into that. So our next weekly targets are these levels here. If we do get into this green box, though, the price to earnings does dip into the high to mid 30s, which is fairly attractive. I mean, you would only be talking about 1.5 times the current S&P for Tesla stock, which is still growing revenues, right? By in excess of the mid 30% per year, which is absolutely phenomenal considering, all that's been done already. But in terms of the technicals, we did unfortunately get a breakdown here. So that's what I will be looking for. At this point, we are still in a monthly, weekly, and daily downtrend. So all things pointing, the trend is your friend, right? So first of all, we're going to have to reverse the daily time frame. If we come down to something like this in this area, we're going to have to get a nice little bounce going, then potentially, make a higher low here, and then reverse the daily time frame. Only at that point can we then look up to the weekly and then higher to the monthly to figure out if our monthly higher low is to be set in this area here, right? So one thing at a time, guys. We got to be patient with this. And if we want to look a bit deeper into that, we would always look at something like Tesla QQQ. So you always want to see how is this performing against the major index that it's in. So keeping that in consideration, guys, when we compare Tesla and QQQ, this chart just represents how weak or how strong is Tesla compared to the NASDAQ. So take a look at this chart on the daily, right? as we can see, clear daily downtrend in action, weekly confirmed downtrend at this point as well, kind of like on Tesla at this point on Tesla's actual chart. It used to be in a tightening range, but now we've confirmed the downtrend flat out. And if we look at QQQ on the opposite side, it's still in a weekly uptrend. So Tesla, unfortunately, has been underperforming the NASDAQ now for a while. Not just with today. I would say this started happening roughly about, beginning of March, mid-March, to where we really started underperforming the NASDAQ. And with the most recent earnings, guys, unfortunately, that's kind of aggravated the situation to now, even on Tesla's chart, we're now in a weekly downtrend. So this is just normal price action. We always knew that this tightening range was going to break one way or another, right? We were either looking for a break to the upside further into the 200 levels, and positive earnings could have just done that for us. But unfortunately, we went to the negative side, and now we're looking for further weekly consolidation into the lower levels. And our next stop, we really need to be looking for the monthly higher low, guys. That's going to be my next target. We're really looking for monthly higher lows at this point. The daily time frame is not yet oversold, but as you can see, the 4-hour with today is deeply oversold. So we may be expecting some form of short-term bounce, but let's not get ahead of ourselves. The next most likely scenario is only a lower high compared to this high right here, right? Because now the sellers have kind of generated a lot of space. So the most likely move will be a higher low, potentially here. I mean, guys, it could stop. We could do it down here. We could do it up here. You don't know. So keep an eye on these lower time frames. And when we do top out, we're going to have to see. I'm not saying that it necessarily has to go fill the gap. That's why we really have to keep an eye on what the lower time frames are doing. And in relation to QQQ, you guys know that we are getting some big earnings next week. So I cover this in my daily market recap videos if you haven't seen them. So we are potentially expecting some weekly consolidation at this point in the major indexes, not only the QQQs, but SPY as well. I would not be opposed if Apple is in 2 weeks. If Amazon, Google, Meta have some, not so great earnings next week. I'm not saying they have to be disastrous, but anything other than outperform, guys, will potentially send us into weekly consolidation on the indexes. And unfortunately, it may drag Tesla down with it as well. So we really got to be watching out for that. Now, that's it for pretty much the charts, guys. I'm going to be really taking it one time frame at a time here, keeping in mind Tesla's strength in relation to QQQ and Tesla's chart on its own. The next 2 weeks will be really key for this stock to figure out, okay, what is going to be the bottoming process here on the daily time frame and lower. I also wanted to bring up a few key metrics here that were kind of noteworthy to me in terms of just the fundamentals that came out of the earnings, right? So Tesla basically, as I was saying before, guys, Tesla is kind of in a it's in a race to zero, basically, right? So it knows that the other car companies are playing catch up with it. And Volkswagen, GM, Ford, and a few others, Toyota as well, they have negative margins on every single EV that they sell. And a big selling point for Tesla over the last 2 years at least has been that since it's a premium vehicle, it can therefore command a premium sales price. And because Elon Musk has done such a good job at revolutionizing the production process, he was able to generate excessively high margins through the machinery that he uses. The production process is right. They've really trimmed down the amount of parts as a whole you need to make the vehicle. He's also getting into some new battery technology. So he's doing everything in his power to do as much cost control as possible. And because of that, he's been able to generate in excess of 20, 25, at a certain point, over 28% net margins. However, they have been coming down a little bit. So I call this the race to zero, right? It's the great pricing power race of capitalism. Is when a company knows that it's really good at something, it can start to cut its prices to boost demand to gain market share. So what Elon is doing right now, he's being a shark. He wants to capture the most amount of market share possible. And as a result, He's going after the other company's net margins. He said it on the earnings call. You guys probably heard it. He said we can produce vehicles at zero because he knows that the value of the future cash flows of the business brought to present value are going to be net positive. And if he can scale production, as he's shown us that he can, they've been scaling into these levels now for the past 3, 4, 5, 6 years excessively quickly, building new factories. We're going to be very, very curious to see when they get their 2 new gigafactories online and producing at full capacity. With the price reductions, can the demand stay strong? And coming into a recession year, obviously he's trying to stimulate demand through these price decreases. So the price decreases have a double effect, right? They try to keep demand at the same level. So he wants to be able to sell every single car that he produces, even though his production is going up. So he's trying to be able to sell every car, but also it has an effect on the competition. And Ford and GM stock, I mean, like if you just look quick here at Tesla's net margins, right? So we have a net profit margin here quarterly of about 15% for Tesla. If you take the 2 other American competitors at this point, I mean, look at Ford, right? 3% net margins. And that's on their total vehicles. If it was only EVs, this net margin would be absolutely negative. It would be terrible, as a matter of fact. GM, same concept. Profit margin, not only 4-5%, right? If it would only be considering their EV vehicles, it would be an absolute disaster. I won't even talk about Rivian and Lucid because they're not even profitable as a whole yet. And they do still have a lot of debt that they have to work off their balance sheets. But it just goes to show, guys, that Tesla is in a very, very solid position in relation to its competition. Very, very solid position. They have some pricing power, which is why the stock price can command a higher than normal PE ratio. Now, should it be 50 with the earnings that they just released yesterday? That is always up for question, right? That's basically up to the institutions to decide and retail investors to decide if they want to support price at these levels. But that's something we're going to see throughout the year, guys. But don't forget, as I'll mention later in the video, as they keep increasing earnings year over year, this PE ratio will eventually come down. It will eventually come down. So they will grow into their valuation. And even though they're going into a giant race to zero, I call it the race to zero, but it won't be zero. Elon's maintained that he does want to maintain gross margins of roughly 20%. So it was a bit of an exaggeration. He was just trying to prove a point. But the economic concept that he's trying to do with pricing power and pricing out the competition is a real thing, guys. This doesn't only happen in this industry. It happens in many, many, many industries. And it's a hostile thing to do against your competition. And for the most part, like, if you're in a position of power to where you're the industry leader in the EV sector like this, you can do this. And other companies are going to struggle to keep up. Trust me, they will struggle to keep up. Even if Tesla releases a $25,000 vehicle, it'll be even tougher for the competitors to keep up with that, right? So I also wanted to give a quick thought here to one of the metrics that Wall Street really didn't like about this earnings call, right? So the one real thing that they really didn't like, we're going to forget about gross margins. They did increase revenues. Tesla's revenues will be increasing every single year above 30%. That's the consensus. However, the one problem that people had with the earnings yesterday is that aside from regulatory credits, the free cash flow was actually negative. So if you look, guys, Tesla for the past 2 years has always had cash on hand of between $2 to $4 billion. So we call free cash flow, right? Between $2 to $4 billion of free cash flow, which meant that they had enough cash to pay their obligations and put to the side for a rainy day or to leverage for future price cuts, right? But now here's the problem. Wall Street was expecting $3.2 billion in free cash flow, but because of the price cuts, and because of their spending on their new factories, it's only down to about $441 million. However, if they were to exclude the grants that they get from the government, the regulatory credits, they would actually have negative cash flow. And negative cash flow in the recessionary environment, I'm not saying the recession is going to hit Tesla as much, but that is the one metric that Wall Street looks at in a recessionary environment is free cash flow. And a company that doesn't post free cash flow, positive free cash flow, it kind of sends like a red flag, a big red flag, right? So that's the one thing that they really didn't like. Is it going to be a problem in the future? Well, keep in mind that these factories that they've committed to building, they've already expensed for them, right? So it stands to argue that this year, if they continue producing at the rate that they're going to produce, and the factories come online, and the deliveries keep up with pace, that this free cash flow should remain positive for the rest of the year. They don't have any major capital expenditures to do this year. However, they also, on a positive note, we are expecting the Cybertruck to come into production here into Q3. So that could help not only increase margins, because it is a luxury premium vehicle, right? And not only increase margins, but also increase give a renewed interest of the company and keep our free cash flow positive. We don't want to see this number come negative. However, I mean, the one bad thing that can happen, the X factor here, is if the government somehow removes the regulatory credits, then it would be a big problem for Tesla. So keep that in mind. The free cash flow metric is arguably the most important metric. Forget about the gross margins, because yes, they are coming down, but as I showed you, they're still well above industry standard. But the only problem with that is Tesla's selling point earlier was that since it was a premium vehicle, they could ensure a nice cushion of margins. But if now Tesla tries to compete with everyday vehicle prices, right? Well, the margin could take a hit. Yes, they'll sell more, but the margins will come down, and Wall Street once again will reiterate the fact, well, why should we give you a premium valuation if you are now attacking the normal segment of the auto market? And obviously, we still have to see Tesla's energy business further expand. That was one of the very positive things, right? Very, very, very positive things down here. Energy generation and storage leapt 148%, 1.53 billion. So that's nothing to turn a blind eye at, guys. It's very, very, very solid numbers. We also have their insurance, and what Elon is, Elon's pride at this point is going to be full self-driving. The full self-driving will add $10,000 to $12,000 per vehicle. So he may be cutting the cost of the actual vehicle, but if he can then replace that lost cost with FSD, well, that's going to juice the margins, because FSD arguably really doesn't cost them that much on a per vehicle basis, right? Especially not if they solve it. So that's definitely something to look out for, guys, but not something that you can flip the switch like this, right? We're talking about the next few years in terms of that. So that's unfortunate for the negative free cash flow. It's the one metric, in my opinion, that brought the stock price as far down as it did. But if we look on the financial data here, like if you guys see, like, there's nothing bad here. Like if we look through 2025, revenues are still expanding at a very, very rapid pace. Operating margin, net operating margin should hover between, anywhere from 13 to 15%. These have all been revised to the downside, by the way, guys, already. As you can see, slight little hit on EPS here for 2023, all things considered, but it should be going up as these other factories get to scale and they can keep delivering their vehicles. And like I was saying, PE ratio will grow into the current valuation if the stock price maintains around current levels, right? These are all considering further levels. The stock price increasing at around 15-20% per year, and with revenues outpacing that. So we're looking at a PEG ratio here in the 1.2 to 1.6 range would be, kind of the best thing to look out for here. But income statement generation, as you see, guys, multiple expansion here for the rest of the year, and that's what we really want to see, guys. We really want to see the balance sheet as well, and they don't have that much debt on the balance sheet, so everything is in expansion at least through 2025. So that's really what we want to see. And point number 5 that I wanted to bring up, so we had Tesla on the technical basis, Tesla versus QQQ, so in relation to where it is versus the index, its strength and weakness, and what we're expecting QQQ over the next 2 weeks with major earnings, Apple, Amazon, Google, Microsoft, Meta, right? We have the race to zero factor, right? Reduction of cost. We have the negative free cash flow that Wall Street didn't really like. And lastly, guys, the one thing plaguing Tesla right now is the financing costs, right? So I'll show you the financing costs, right, in Canada right now for a new car. So these financing costs for most people are starting to get a little bit rich, especially if the media keeps pushing the recession narrative, and if people start to get a bit fearful, well, they won't really want to take. I understand the prices of Teslas have come down. However, the financing cost, the extra addition of the financing cost on top of the car's price could just be the tipping point for a lot of consumers to wait, right? And when they see, here's the double factor, when they see financing costs this high, and they also see Elon Musk cutting prices and promising to cut more, why would they buy now? That's one of the arguments, right? Why would they be pushed to buy now if they know financing rates are high and interest rates are potentially going to come down if Jerome Powell turns the page, right? Bank of Canada has paused rates, but in the US they have not paused rates yet. They haven't talked about dropping rates. So consumers may be willing to wait an extra year to get a new car if they can get lower rates potentially after some rate decreases, right? And they can be sure that a potential recession is out of the way. They don't want to lose their jobs. So that's one of the negative factors. And, they're waiting for the further price cuts as well. So those two things in combination are kind of a weight on the shoulders of a consumer, in my opinion. So another kind of negative factor here. And let's not forget, guys, like a lot of the segment that Tesla goes for, supposedly the higher end segment of the consumer, right? So people making in excess of $60, $75, $100,000 a year. Well, here's what happened this year, guys, right? So we've already had so many layoffs. As you can see, about 168,000 jobs were lost in the major tech companies. And there's nobody who likes driving Tesla more than people who actually work in tech. They love the product. Everybody knows that's the number one target segment for Tesla, is these higher paying jobs and these higher paid individuals. Most of Tesla's target segment is between the ages of 30 and 45 years old. And a lot of them work in similar jobs, right? In tech jobs or lawyers or bankers and whatnot. And unfortunately, just tech alone, not even talking about the rest of the job market, but tech alone, all of these companies, right? Meta, Apple, Netflix, you even have the other car companies laying off, right? GitHub, Disney, Salesforce, the list goes on, Amazon, Twitch, right? So all of these factors, unfortunately, contribute to the fact that we're not sure if Tesla is going to be able to keep up the demand this year. I think Elon is doing a very good job in reducing prices to kind of counteract those recessionary pressures. However, that takes a hit on your net margins, on your free cash flows. Elon's job now is to just keep production up, stay with the plan. If he needs to do further price cuts, like let's not forget, no other automakers are immune to this except maybe Ferrari, Rolls-Royce, because they're premium products. In recessions, rich people don't lose money, right? It's the middle class who usually gets squeezed. So no automaker who makes vehicles for the middle class is immune. But hopefully for Tesla, they have enough of a cushion and enough of a lead on the rest of the EV sector to be able to ride this uncertainty period out longer than the competition. And in terms of that, right, our stock price has already come down so much. If we do drop down to these lower levels here, valuation starts getting attractive once again. And at that point, it'll just be a question of time, guys. Like I said, not only do we have to get through the recessionary pressures, but we do also have to wait for our lower time frames to reverse. We're looking for the monthly higher low. Now we need to see, okay, when will the weekly drop be done? Once the weekly starts bottoming out, you look for the daily time frame, right? Daily time frame is going to happen first. When can we reverse the daily time frame? After that, you'll look on the weekly. Okay, then the weekly time frame. Now it's in a weekly confirmed downtrend. What we need to do is this. right, can reconfirm the weekly uptrend. When we reconfirm the weekly uptrend, you'll know most likely that your monthly high or low is set. Okay, guys? So that's everything that I wanted to share with you. I hope you appreciated the video. I really hope I didn't sound too bearish because that's not my intent. I'm just trying to explain why the price dropped. I am still bullish on Tesla. It's one of my largest holdings. I love the company. I love the management. I know that they're going through a kind of rough time to where investors have to reevaluate whether or not the reason they got into Tesla is the same reason as today. But I think that Tesla still has so many good things to deliver, guys, that you really won't see the full premise and the full capacity of this company play out for another at least 2-3 years until they'll be running at full capacity to where it'll be an undeniable leader, not only in the auto space, but in the AI space as well, right? So that's it for the video today, guys. I hope you enjoyed it. If you did enjoy it, consider giving me a like, considering giving me a subscribe, only if you want to. And check out my other videos. If you guys want market recaps on different stocks, I show you some trades, and we got always the technical analysis. I always show my trades, what I'm doing throughout the week. Big in the options, not the YOLO options, the very safe play options. We're writing options, right? So take care, guys. I love you. Hope you had a good day, and I'll see you in the next one.